Hey traders, Nick Shaheen here, recapping the week ending 10/31. This time I really mean it. Whoa, what a week. I do have proof this time that this is the week every time I say it. But anyway, scoreboard for today. Green, 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 green. Everything's green. Everything's all-time highs almost. Dow up 1%, a little over actually, about 195 points. And unlike yesterday, it's not all centered around Visa. And then we've got the SPX up almost about the same. NASDAQ led up. Actually, it and the small caps, it was almost a tie between the two, 1.5%-ish. So we've got pretty high levels everywhere, except for the small caps that are not close to their all-time highs because they spiked really high up. Although they did outperform this week, it was incredible, and we'll see that in the candles. That's today's scoreboard. What really happened today? Last night, out of nowhere, Bank of Japan, boom, more QE. They're, let's see, review the definition of insanity. They're mired, economically speaking, and they've been doing QE forever. And let's do more of it because it's not working so well, so more of it must not work even more. So they're expecting the same outcome from doing the same thing over and over and over again. That is the definition of insanity. I'm not calling them insane. Well, maybe I am indirectly. So anyway, this is immediately response 10 points in the ES immediately last night, and then a few minutes later it was double that and then some. The bulls had, the bears had nothing to take away from this week, anything good, nothing good. Maybe the fact that, and this is a big name, maybe, the fact that they could not, the SPX was so close, it was within a buck of the all-time high, with such momentum behind it. Why couldn't they just break that too? I believe the Dow is in all-time high territory. NASDAQ nowhere near it because of the dot-com bubble. But the SPX, one would think that they could have done another buck at the close. Just $1. It doesn't take much to do that. They had everything lined up for it. Anyway, maybe that's the only takeaway that the bears could take solace, in which they can take solace this week. Anyway, that is the scoreboard. Today's price action, it had a little bit of everybody. Right here, it started looking good for the bears, and then even here, all kinds of bearish formation throughout the day. This is the S&P, this is the NASDAQ. You don't need to worry about the numbers themselves, but you can see that they were potential breakdowns, like especially right here. I do believe that may have been the spaceship crash, unfortunately, where one person died, the Virgin Atlantic. Apple was so quiet and coiled almost all day. You know, that had a whipsaw in the morning, and then the amplitude dimmed, and then he was like, okay, just ready to break out, and then finally it ran with everybody. And that was all on the backs of oil, which is right here, that rallied into the close. Unfortunately, actually, today there were a few breakdowns in the relationships. We've had good relationships between market moves, oil moves, bonds, and 10-year rates. Today it broke down 2-3 different ways, and it flip-flopped. At one point, markets were rallying with the rallying bonds and falling rates. Just moments later, it reverted the opposite, and then at one point, the relationship was bearish with regards to TLT and TNX. However, oil was rallying and markets were falling oil, and then that broke down and was the opposite. So there was confusion all around. Yesterday was definitely confusion. There were system errors that caused some pricing spikes at one point in time. There was one giant candle in the middle of the day. You can review that if you want to. So there were some strange goings on this week in the market. So what do? Do I change my thesis? Do I jump around and say, okay, we're to the moon, we're going to add another 10-11%, okay? No, I can't do it yet. I'm missing some pieces of the puzzle. I need more puzzle pieces. Today was like somebody struck the table and all the puzzle pieces, I had them lined up nicely, they just got jumbled up, okay? So I need to digest a little bit more. All right, let's look at it in pictures. Let's go to the weekly candles because that zooms out. This is, and let's take at the, okay, let's look at the SPY. Actually, let's look at the SPY because we can tell on volume too. to see how the volume stacks out. Volume was lower than last week. An impressive candle. Remember that long time dotted green line? That's a long time trend that extends over 2 years. And we lost it, and I said, well, there's a possibility here last week when we closed that it becomes resistance. Obviously not, because we are closed right above here at the all-time highs, just a hair away from the all-time highs, right? So this is a channel we were trading before the breakdown. So if you want to say that the breakdown was a liar, so it makes sense that we may want to revisit the upper end of it, which was put us at the 206.5. If we get some sort of an ECB move next week, it's almost a guarantee that we're going to get there. If we don't, then there's a good chance that we may just meander here a little bit, if not fall back a little bit. I'm not forecasting doom. As a matter of fact, this candle here tells me, okay, the near-term doom is known almost, because we saw the world end right here. There was a whole bunch of headlines, and this is all we can muster as far as bears. So this gives me something to shoot for. So if I have some bearish positions here, I can throw some bullish positions around here and feel somewhat safe about it, okay, as a hedge. All right, so this is the SPY. Volume was not too impressive, not nearly as impressive as 2 weeks ago or the week before that when we fell down. But you know, those two green candles on lower volumes than red candles, that concerns me a little bit from the bullish perspective, but not a cause for alarm and run for the doors. The triple Qs were even more impressive, I believe, because they had been doing better, mainly because of earnings, and we had some momentum stocks this week just blow it out of the water. I mean, we've got LinkedIn plus 13% almost, something else, GoPro 15% or something like that. So, and they definitely bounced off of the levels and even threatening the upside already, if not one already. So they may not have as much room to go up based on the channel that they had been trading. But again, volumes much higher on the downside than the upside. So maybe, okay, that's another takeaway for the bears. Okay, volumes is not as heavy, therefore less conviction in the buying. That's the theory. Okay, I'm not putting money behind it right away, but it's there for me to keep in mind. Let's look at the small caps, and the week for the small caps was insane. I do believe that is the largest candle of the year. And if not 2 years, let's expand that into 2 years. Each candle again is 1 week, and I believe it dwarfs everything else we can see. This candle right here, I do not see a bigger candle anywhere else. This is the biggest candle for the small caps in at least 2 years. I don't have time to expand it further out. One thing I'm noticing here, unlike, let me zoom back in to just 1 year worth of candles. Unlike the other ones, I can't see behind this, the downside candles and the upside candles are about equal in volume. As a matter of fact, this candle here, as big as it is, it's on high volume, so that's really emphatic. Also, recently I had drawn this, so we had 2 kisses of the top end of the trend. This is a definite close above it, so that's usually bullish. So we have something, the bulls have something to cheer about with the small caps. Remember, I drew the channel and I had to adjust it because the candles kept getting bigger and bigger, and just impressive performance on the small caps, and I'm not really sure what that's all about. Early in the week, I did note some options, interest in the options, I think about Tuesday, that told me that some big money were expecting some giant moves in the small caps. They missed it by a few bucks, but they were right in the direction. So who knew? How could they have known? Okay, maybe somebody from the Bank of Japan is investing in the options market. I'm not really sure. That's how they make their money. But anyway, obviously joking. All right, that's the scoreboard. Monday. So first of all, violent week, and everyone seems to be on the same side. We're going to the moon. Too many weird things going on, so I'm missing pieces of the puzzle. Monday, we should come into it, obviously, with some bullish bias given the performance today. However, today the move was all headline, just like on the downside was all headline. I can't give it, say, okay, I changed my thesis. It's a headline move. I need to see follow-up with more headline changes. So some people, I got the sense today from the commentary and the Twitter feed, that some people are expecting a similar move from Draghi over the weekend, as early as this weekend. Maybe, maybe not. So this is an important point to make. If the move doesn't come, will we have a sell-off on Monday? I'm not sure. We may have some money to give back. How do I trade it? It's easy. We can pick some longs and some good names. If the move doesn't come on Monday, then it's going to be a built-in put, because everybody's going to be expecting ECB to say something throughout the week, so they're not going to sell off the market until they know otherwise. They'll lose faith as we come closer to Thursday. After we pass Thursday, if nothing happens, then the faith starts going away. They're scheduled for Thursday, their rate decision over there, I think. So I expect strength all week, in the sense where there's not going to be tremendous weakness, panic selling, because they expect a positive statement. They may get nervous a little bit, book some profits, but if you pick like Apple or Google, names that have already reported and showed that they can perform and found footing if they got sold off, then maybe one can take long positions in those. So that would be the trade. You can even do it via credit put spreads and take some of the money and buy some debit call spreads if you're really bullish to, you know, double end the deal. So trading changing the thesis as far as trades for the thesis longer than 1 week, I'm not ready to do any of those because I'm missing pieces of the puzzle, and I'll wait for those pieces before I make my decision. This is Nick Shaheen. Play it safe. Recapping a week ending Halloween, 10/31/2014.